One thing that historically has kept Indians away from equity is the fact that it carries market risk. And as a nation, we're generally a lot more risk averse than most other developed countries, if I may use that word. What brings me to my next question is that most people still get put off with equity as an asset class because of the risk it carries and the uncertainty of the returns that go with it. So you could have a year when your equity markets are on a breakout, which we're now seeing in the last 3 months, and then you might have years or extended years of underperformance of equities. I mean, of course, we've got to make sense out of this and look at it as a 10-year investable time horizon. But reality is that most of us still freak out about equities because of the inconsistency of returns, right?
Well, that's the nature of the beast. The fact is that nobody can take away and predict volatility, right? And because there is volatility, there is return, right? So you don't take the risk, you don't get the return. It's up to you to choose whatever objectives that you want to choose, and therefore have an asset allocation which will work for you.
Yeah.
And you know, nobody can say that, hey, this is how it's going to pan out or not pan out. There are risks in it. Now, if you look at risk, you know, we talk about risk, we don't measure it, right? The simple thing like standard deviation is a measure of risk. When you invest money for 3 years, the last 18-20 year analysis shows that the standard deviation is 13%. But if you do it for a 10-year period, the standard deviation drops to 3.5%. So all these numbers are here, you know, they need to be just looked at and then take a call which is on the basis of data and information and be comfortable. Learn to be comfortable with volatility, right? And that's the only way that you can make the return.